What if I told you the next financial meltdown, the one everyone fears, the one experts keep pretending isn't coming, was already engineered more than a decade ago? What if the 1% didn't just benefit from economic chaos, but designed the entire system so that every crisis becomes a siphon, pulling money upward like a vacuum? And what if the final stage of that design activates in 2025? Because here's the truth. The real cause of the next collapse won't be inflation. It won't be a recession. It won't even be the stock market. It will be something almost no average person has ever heard of. A system hiding in plain sight. A shadow marketplace that moves over $200 trillion globally, without regulation, without transparency, and without consequences. You feel the effects right now. Rising bills, crushing debt, your salary buying less every single year. That feeling that you're running faster but falling behind harder. That's not an accident. That's architecture. Before we dive deeper, where are you watching from? Comment your city or country below so we know how far this community reaches. And if you're tired of the official narratives, if you want the unfiltered truth, make sure you subscribe, because what you're about to hear has been scrubbed from mainstream conversations for over 20 years. The elites say the future is uncertain. But what if the collapse of 2025 has already begun? To understand the truth about 2025, we need to go back, not just a few years, but to the exact moment the 1% discovered how to profit from collapse. Most people think this revelation started in 2008, but the architecture actually began in 1971 when the US left the gold standard. The moment money was no longer backed by anything real, something strange happened. Debt became the product. Risk became the commodity. And financial institutions realized they could create wealth from pure illusion. Sound familiar? Suddenly, banks were no longer limited by physical assets. They could print credit, inflate bubbles, and then offload the consequences onto everyone else. And with each crisis, they learned something new. After the crash of 1987, they learned speed. After the dot-com bust of 2000, they learned scale. And after 2008, they learned the most important lesson of all: invisibility. Because here's what the textbooks won't tell you. The meltdown of 2008 wasn't the failure of the financial system. It was the successful test run of a new one. Think about it. Trillions of dollars disappeared. Communities collapsed. Homes were taken. But the people who caused the disaster, they walked away richer. Much, much richer. And instead of dismantling the system that caused the crash, Wall Street built a second system, hidden underneath the first one. A place where the real decisions were made, real money moved, and real power was concentrated. This second system didn't need public approval. It didn't need Congress. It didn't need transparency or regulation. It lived in the shadows. Sound familiar? This is where shadow banking was born. And most people still don't even know it exists. This system includes things like dark pools, repo markets, off-balance sheet liquidity chains, synthetic leverage, derivative pyramids, and private credit networks. All woven together into a single global organism, a creature with no face, no borders, and no accountability. By 2013, shadow banking had already overtaken traditional banking in size. By 2020, it controlled more than 60% of all global financial flows. And today, that number is even higher. But here's the key. Shadow banking has one fatal flaw. It only works when liquidity, the lifeblood of the entire system, continues flowing uninterrupted. And someone, somewhere deep in this structure, discovered that if you control the flow of liquidity, you don't just control the market. You control every crisis that happens after. Because in a world driven by liquidity, whoever decides when the system runs dry decides who loses everything and who becomes untouchable. This is the secret the 1% learned. And always, always, they profit when liquidity chokes. Every single recession since 1971 follows the exact same pattern. Money expands. bubbles inflate, liquidity tightens, average people lose everything, and the 1% buys the aftermath for pennies on the dollar. This cycle isn't natural, it's engineered. And 2025 is the first time this cycle will be global, synchronized, and accelerated. Why? Because in 2023 and 2024, the world crossed a critical threshold. Total global debt hit an unimaginable $315 trillion. The shadow banking liquidity chains became so leveraged, so interconnected, and so overextended that a single blockage could collapse the entire network in days, not years. Not months, days. We've already seen the warning signs, the bank failures, the liquidity gaps, the stress in the repo markets, the contraction of credit, and a sudden massive rise in private credit dependency. These are the exact same signals that preceded 2008, but this time they are multiplied by a factor of 7. The official narrative says everything is under control. Sound familiar? But the truth is simpler and far darker. The 1% are positioning themselves for the moment the system snaps. Because when liquidity collapses this time, the drain will pull wealth upward instantly. That is the trap. That is the design. And that is what activates in 2025. To understand the final piece of this puzzle, we must uncover who created the mechanism that makes all of this possible. And here's the twist the public never hears. The most powerful force in modern finance is not the Federal Reserve. It's not Congress. It's not the IMF or even Wall Street. It's a system of private liquidity chains built by hedge funds, investment banks, and global asset managers, all operating entirely outside of traditional oversight. These chains allow institutions to borrow, lend, and leverage trillions of dollars without it ever appearing on a balance sheet. No transparency. No regulation, no paper trail. And the person who enabled this system, the architect behind the entire architecture, was not a politician, a CEO, or a central banker. It was someone far more influential. Someone whose policies reshaped global finance completely behind the scenes. Someone whose name almost never appears in mainstream conversations about this topic. But everything that is happening today, every liquidity spike, every credit contraction, every engineered crisis, can be traced back to this one individual's blueprint. And once you understand their role, you understand exactly why the 1% are preparing for 2025 like a coordinated extraction event. Because the chain they designed has a critical flaw that becomes fatal when global interest rates rise, debt reaches unsustainable levels, and liquidity dries up. Just like right now, we are standing at the edge of the exact scenario this person privately warned insiders about decades ago. The identity of this architect. You won't believe the name. And the receipt behind their design is wilder than you could ever think. To understand the coming 2025 meltdown, you have to see the machine. The invisible engine that powers the richest 1%, protects them during every crisis, and absolutely devastates everyone else. That engine is called Shadow Banking Liquidity Chains. It's a system designed to be so complex that you never question it, but simple enough for the elites to weaponize it. And today, I'm going to show you exactly how it works. There's a name they never want you to associate with this. A name you won't believe. Timothy Geithner. Yes, the very same Treasury Secretary who was presented to us as the calm crisis manager during the 2008 collapse. In reality, he was a key architect who normalized these off-balance liquidity chains back in the early 2000s. Before he was Treasury Secretary, Geithner was head of the New York Federal Reserve, the most powerful regional Fed, deeply connected with the world's biggest banks. And under his watch, Wall Street quietly built the shadow system that would later explode in 2008. And I don't mean explode and destroy them. I mean explode upward. It transferred trillions of dollars, over $29 trillion in emergency funding, to the very institutions that caused the collapse. That number isn't fiction. It's documented. And it was just the beginning. Here's the simplest way to understand this. A liquidity chain is a hidden pipeline connecting institutions so they can borrow money instantly without reporting the risk. Imagine a private tunnel system built underneath a city. Now, imagine the richest people building 20,000 miles of these tunnels that only they can access. That's what liquidity chains are. Banks use them. Hedge funds use them. Private equity uses them. You do not. And here's the dangerous part. If one tunnel collapses, the entire underground city implodes. That's what happened in 2008. But in 2025, the tunnels are 10 times larger, and the pressure inside is far, far higher. Let's break it down, step by step. Because once you understand these layers, the entire game becomes clear. Level 1 is the surface system. This is the illusion. It's the system the public sees. Bank accounts, loans, interest rates, stock markets, government bonds. People think this is where the real action happens. It's not. This level is just the front stage, carefully controlled to look stable, predictable, and somewhat rational. It's the mask. Level 2 is the hidden balance sheets. This is the real leverage. Behind every bank you see, there's another balance sheet you don't. This is where the repo agreements, collateral swaps, synthetic assets, and private credit deals live. These instruments don't show up in public filings. They aren't stress tested. They aren't voted on. They are not monitored. By 2023, these hidden balance sheet transactions were moving over $80 trillion a year. And that's just the second level. Level 3 is the ghost market. This is the world of unregulated finance. It includes derivatives, dark pools, collateralized swaps, total return swaps, off-exchange lending, private repo, and synthetic leverage. This market is larger than every global stock market combined. As of 2024, derivatives alone reached a notional value of $600 trillion. This number is so large, it's almost abstract. But here's the real translation. The 1% have built a casino big enough to swallow entire countries. And they did it in total silence. Now we reach level 4. The final level, the liquidity chains, the kill switch. These are the underground tunnels themselves. This is where institutions connect to each other privately, forming long, self-reinforcing chains of obligations. A single chain might involve a hedge fund lending to a European bank, which lends to a private credit firm, which lends to a Wall Street dealer, which lends to a sovereign wealth fund, all lending to each other, all depending on each other, all pretending the risk doesn't exist. And here's the nightmare scenario. If any single node in that chain fails, the entire chain collapses. Not just one bank, not just one fund. The whole interconnected structure. This is the kill switch for global finance. The elites know this. They designed it. And 2025 is the year the system becomes too leveraged to sustain its own weight. Everything is converging in 2025. First, global debt is hitting a breaking point. Total global debt is already at $315 trillion. By mid-2025, it will approach $340 trillion. This is beyond repayment. It's only sustainable if liquidity keeps flowing. But liquidity is tightening. Second, the US is entering a higher rate stagnation window. Even if the Fed cuts rates a little, the damage is already done. Debt has repriced upward. Corporations are hitting refinancing cliffs. Consumers will default. Governments will struggle to issue cheap debt. This creates massive liquidity stress. Third, the repo markets are flashing the same warning signs we saw in 2019. Back then, the repo market broke and the Fed had to intervene. In 2023 and 2024, it began flashing yellow again. If the repo market fails in 2025, liquidity chains will freeze. And once that happens, everything breaks. Fourth, private credit has ballooned to $2.1 trillion. This is the least regulated, most dangerous part of modern finance. It grew nearly 400% in a decade with no safety nets. If defaults rise, private credit cracks first, and those cracks will travel instantly through the liquidity chains. And finally, China's shadow system is already melting down. Evergrande Country Garden, local government debt, the property collapse. China's shadow banking disaster is spilling into global markets. The West is not insulated. So let's walk through the mechanism of the collapse, step by step. Step 1. Liquidity tightens. Interest rates rise. Banks stop lending aggressively. Repo becomes expensive. The tunnels start to shrink. Step 2. Collateral quality falls. When markets drop, the assets used as collateral, stocks, bonds, real estate, all lose value. The chains become unstable. Step 3. One node fails. Maybe it's a hedge fund. Maybe it's a European bank. Maybe a private credit firm. Doesn't matter who fails first. What matters is the chain. Step 4. The chain snaps. Institutions scramble for liquidity. They pull funds from everywhere. The collapse spreads like a virus. This is exactly what happened with long-term capital management in 1998, but on a much smaller scale. In 2025, the scale is global. And this brings us to step 5, the darkest truth. Wealth drains upward. Instantly, when liquidity chains collapse, the 1% don't lose wealth, they harvest it. They have cash reserves ready. They buy everything at distressed prices. They acquire companies, homes, land, and assets for pennies on the dollar. The middle class gets wiped out. The lower class suffers. The elites just wait, and then they feast. This is not a theory. It has happened in 1987, 1998, 2000, 2008, and 2020. Every crisis is an extraction event. 2025 is simply engineered to be the largest one yet. So why can't the system be saved this time? In 2008, the Fed printed over $29 trillion in emergency operations. In 2020, global central banks printed over $10 trillion in a single year. But in 2025, the banking system faces a paradox. Printing money saves the system, but destroys the currency. Not printing money saves the currency, but destroys the system. There is no good option left. The trap was already set. The 1% position themselves to win either way. If markets crash, they buy everything. If currencies collapse, they move to hard assets. Banks fail, they acquire them through their private capital. This is why the meltdown isn't an accident. It's an extraction strategy. The liquidity trap is the final stage. And here's the final truth you were never meant to hear. The 2025 meltdown isn't a prediction. It's the mathematical result of a system built on borrowed time. Every crisis of the past 50 years pushed us one layer deeper into synthetic finance, one step further away from real value, real production, and real stability. We replaced savings with debt. We replaced risk with leverage. We replaced markets with illusions. And we replaced transparency with shadows. Now, the shadows are bigger than the real economy. The architects of this system are not panicking. They're not confused. They are not surprised. They are preparing. Because when the liquidity trap snaps shut, it won't feel like a normal recession. It will feel like the floor disappearing. You'll see companies collapse overnight. You'll see banks freeze withdrawals. You'll see governments scramble for emergency funding. You'll see asset prices fall faster than anyone believes is possible. And through it all, the 1% will move quietly, decisively, and ruthlessly, acquiring everything the moment the dust settles. Because this time, the collapse won't just transfer wealth. It will transfer control. The systems built in the shadows are now larger than the institutions above them. When they fall, they don't just break, they reshape power. And so the real question is, are we any wiser now? Or are we simply walking the same path in better suits? Let me know what you think in the comments. Do you trust the financial system to protect you? Or do you see the cracks forming too? If you found this breakdown valuable, if you want more deep dives, more hidden history, and more unfiltered truth, hit subscribe, join the community, and share this video with someone who still believes the system is safe. The 1% already know what's coming. Now you do too.